Hello, everyone. Today's price action on the SPY reminds me very, very vividly of this right here around February 9th and these 2 days over here on February 15th and 16th. So in today's video, we're going to go over that in depth. I'm going to go over the SPY, the IWM, the NASDAQ, and the crypto markets. So without further ado, let's get started with the video. So obviously, I was very wrong yesterday about the assessment. I was thinking that things would be very, very bullish.
False. Black bear.
So the calls that we were holding overnight ended up still making 17%. But what ended up happening, again, reminded me very, very vividly of what happened in early February as well as mid-February. So, just real quick, let me go over this. So we took Apple and Facebook, both hit our 10% stop loss, and then afterward, AMD went 15%, SPY puts went 30%, and then more SPY puts afterward. So overall, it was a good day. If you want access to the Discord, link is in the bio. Go ahead and join if you want. And that's that. So anyway, SPY, right? Both times. So specifically, let's just talk specifically about the February 15th and 16th situation. So during this time, the MACD was also very oversold. And what ended up happening was we bounced very, very aggressively over levels of resistance here, right? Which is very, very bullish. The MACD did not even begin to cross above, which means that there was still a lot more room to the upside. And what ended up happening was Fed Bullard said that there was going to be emergency rate hikes. So that, I believe, was the news that ended up causing the market to fall down to 410. Similarly to today, right, and yesterday, right, the MACD was falling lower, which is why I was saying things looked extremely strong. I said the exact same thing back here. It looked extremely strong. But I guess in this environment, when things do look that ridiculously strong, they don't want it to go upwards. So, because literally this would have been an explosive move, very similar to what happened on February 8th and February 9th. We gapped up huge. That's what should have happened, technically, from a technical standpoint, over here on February 15th and 16th. Similarly, that's what also should have happened today, but it didn't. So what we can see here, the similarities, is that the MACD was oversold here. It was actually falling down. If you watched my video yesterday, the MACD was falling lower, yet the SPY was breaking above levels of resistance and everything closed bullishly, right? So when we see that now, I guess we have to just be very, very careful. When I think things are super, super bullish during this bearish environment, that should be a reversal signal. So currently, obviously, the SPY retested back down to this lower trend line here. It broke down below 450 periodically towards the end. And now the level for tomorrow is still going to be around 450 to 450.50. And essentially, if we break down below, then all bets are off. Most likely what's going to end up happening is we're going to at least, in my opinion, at least touch 447 very, very soon in the next 2 days. If not, 445. But then the next downward target's going to be 443.38, and then 440, and then 437. That's when the fun really begins. So if we break down below this uptrend, again, I'm not saying that this could happen, right? But we just have to trade the levels blindly, all right? If we do break below these levels here, we have to have a bearish bias. And puts, in my opinion, are going to work beautifully, day trading wise. So, do not try to catch any falling knives. Do not try to catch any falling knives. Do not try to blindly be bullish for no reason. Play the levels, and intraday, always stick to the trend. All right, but yeah, essentially that's that for the SPY. We could also see that it closed. I mean, look, this is literally a very, very bearish close. But now 450, 450.50 have to hold as support. There's that for the SPY. Let's take a look at the IWM. we could keep this nice and short. 201.50 and 202 are going to be very, very important levels for the IWM. The indicators clearly look bearish. Again, things look very, very bearish right now, right? Obviously. But we just have to wait until these levels break to the downside. The SPY is still holding that level of support, and the IWM still needs to break below 201.50. Aside from that, there's not really much else to talk about on the IWM. Let's take a look at the NASDAQ. The NASDAQ was very, very, like, so this is supposed, so when the MACD is looking like this, okay, the market should be bouncing to the upside, and the fact that it didn't happen is very, very bearish. So the levels that really need to hold moving forward for the NASDAQ are obviously going to be that 360, very important mental level. And then from there, it's going to be 358.50. And then this level right here at 358. So 358 and then 358.50 are going to be two important levels below 360 for the NASDAQ. But all eyes are on the SPY. We're literally sitting at support for all three of the major indices. The NASDAQ and the IWM obviously broke down much lower. So the 450 equivalent on the SPY was up here at 362 for the NASDAQ, and we broke down below that already. And similarly to the IWM, we broke down below that as well. But now we're getting to another layer of support, essentially, for the NASDAQ and the IWM, because they overextended to the downside compared to the SPY. But aside from that, really, I mean, we could take a look at the other stocks, but I mean, in terms of a downward target, 355 is going to definitely be on the table this week. Definitely, most likely, if we continue falling lower. Like, if we break down below that support on the SPY, and the SPY, things can get very, very messy. And looking back to basically what happened, both of these times, there was a momentary pop. We closed very, very bullishly, similarly basically to what happened before. And we ended up just falling very, very hard afterward. But again, we have to wait for levels of support to really break. And until that happens, there's no reason to try to short into a weakness already, or to try to catch a falling knife. You just have to wait. Wait for the momentum to play in your favor. If you miss a few points, that's completely fine. You'd rather miss 1 or 2 or 3 points even. Probably not going to be 3 points, but 1 or 2 points. Wait for market to give you a direction instead of getting chopped out, okay? We could take a look at the larger tech stocks. But again, it's going to be the same concept. All of these, literally, they look the same. Apple, Google, literally, they're all going to look the same. They're all crossing upwards on the MACD, which should be very bullish, but they all had a red day. So literally, like, the next few days are going to be very, very important. Tesla also had a red day. Very similar. You can see that the MACD is falling lower, yet we had a huge green day yesterday, which should technically be very, very bullish. Let's take a look at Amazon. Same concept on Amazon. And really, I mean, it's all eyes are going to be on this level of support here for the SPY. And then the NASDAQ and the IWM already broke their levels of support. So we have to see if these can continue, right? So now let's go ahead and take a look at the crypto markets. And real quick, it is worth mentioning that the seasonality chart basically shows like an average of the S&P 500. And we can see at the end of March and into April, there usually is a run up. And then April is usually supposed to be green. That's basically the exact same concept of what happened the past few years for March and April as well. So let's see if that can continue. But currently, we have to be very open-minded. Right now, the MACD is very oversold, but the patterns just look very, very bearish. So let's go ahead and take a look at Bitcoin. Bitcoin also clearly just hanging on to near life above this trend line here. The RSI is pointed lower. This is this is basically setting up for a very strong move to the downside. You can see that this is a bear flag, but again, like, you just wait for the levels to break. But again, this is not a bullish setup at all for Bitcoin. This is really not a good setup. Yesterday was a decent setup. We at least closed above these prior closes here. But then today was just an about face. And so you can see that today was just an about face, and we came back, retested this level of support, and we're still red on the day. So it's not the best setup. For bulls to regain control, we need above 47,500. Until then, it looks like it's just buying time to have a huge move to the downside. But yeah, essentially that's that for my analysis on the market. I hope you guys enjoyed. Make sure to comment, like, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.